Ethereum versus Solana. It's a crypto competition that everyone has been watching for the last year, and it's one that's likely to become the headline event of the next crypto bull run. That's why today we're going to compare these heavyweight crypto projects from top to bottom and tell you which we think has the most potential this year. So, if you hold ETH, SOL, or both, this is a video you cannot miss. Now, I'll begin, of course, by saying that nothing in this video is financial advice. It's purely educational content that's meant to assist you on your crypto quest. And I'll also note that most of us here at the Coin Bureau, myself included, hold both ETH and SOL in our crypto portfolios. Okay, that said, let's start with round one, the founders and funding. So, Ethereum is a smart contract cryptocurrency that was originally founded by computer science student Vitalik Buterin in 2013, after he tried and failed to implement smart contracts on Bitcoin. Ethereum technically has 8 co-founders, including Polkadot co-founder Gavin Wood and Cardano founder Charles Hoskinson. These 8 co-founders built the project, with Joseph Lubin co-founding an American company called Consensus to build much of Ethereum's most popular infrastructure. Ethereum's ongoing development is coordinated by the Ethereum Foundation, a Swiss non-profit which provides developer grants and such. Ethereum is believed to have raised roughly $18 million worth of BTC in a 2014 ICO, and its mainnet went live in 2015. Although Ethereum is still technically in development, it is, to all intents and purposes, complete and has become the de facto base layer for a huge chunk of the crypto ecosystem. Take a second to consider that much of the value in the crypto market is derived from Ethereum in some way. Most of the stablecoins in circulation exist on Ethereum. Most of the top 100 cryptos are tokens built on Ethereum or coins based on Ethereum's code. Such are the consequences of Ethereum's first-mover advantage. Now, Solana is a smart contract crypto that was founded in 2017 by former Qualcomm engineer Anatoly Yakovenko. This was after he discovered a way to make a decentralized system that's as fast as a centralized one. Solana's original purpose was to become a decentralized competitor to stock exchanges like the Nasdaq. And Solana was created by an American software company called Solana Labs, and its ongoing development is coordinated by the Solana Foundation, a Swiss non-profit which likewise provides developer grants and such. Solana raised roughly $25 million across various ICOs in 2018, 2019, and 2020. Notably, Solana also raised an additional $314 million in 2021. This is notable because it's very rare for a crypto project to receive funding after its ICO, and particularly after its launch. Many have taken this as a vote of confidence from the various VCs who back Solana, most of whom are affiliated with Wall Street. Anyway, Solana's mainnet launched in 2020. While Solana is likewise complete to all intents and purposes, it too is still technically in development. And Solana's scope has also expanded from being a decentralized stock exchange to providing all manner of use cases, namely stablecoin crypto payments and NFTs. As a fun fact, Solana was once the official blockchain for Circle's USDC. It's not clear, though, if this is still the case. And by the way, if you're enjoying the video so far, be sure to smash that like button to give it a boost. And now for round 2, the technology. Ethereum uses a proof-of-stake blockchain that leverages a novel consensus mechanism called Ghost. We won't get into the specifics of it here for the sake of time and sanity. Ethereum can currently process around 30 transactions per second, but has a transaction finality time of around 13 minutes. I'll quickly note that Ethereum is currently working towards single-block finality, 12 seconds. Now, logically, the low speed of the Ethereum blockchain is fundamentally due to the fact that it's extremely secure and decentralized. According to the official Ethereum staking website, there are almost 900,000 validators on the Ethereum blockchain, which is pretty darn decentralized if you ask me. The minimum stake to become an Ethereum validator is currently 32 ETH, and that works out to around $70,000 at current prices. Staking rewards are 3.5%, and staked ETH is locked for 3 days or longer depending on the demand for ETH unstaking. Any misbehavior by validators results in slashing. Now, this barrier to entry, plus the lack of delegation, is why lots of ETH staking is being done through liquid staking protocols. Almost 1/3 of all staked ETH is being staked through Lido Finance alone. As many people have pointed out, this trend presents potential centralization risks for Ethereum. Moreover, most of Ethereum's validators are using 4 clients to run their software, with over 53% using Geth, according to ethernodes.org. The Ethernodes website also notes that almost half of Ethereum's 6,700 nodes are using centralized clouds to store Ethereum's full transaction history. Now, Solana uses a proof-of-stake blockchain that timestamps transactions using a technology called proof of history, which is often mistaken for being the consensus mechanism itself. Solana can currently process between 2,000 and 3,000 transactions per second, with a transaction finality time of 12 seconds. I'll quickly note that Solana can theoretically process up to 65,000 transactions per second. Now, logically, the high speed of the Solana blockchain is fundamentally due to the fact that it's not as secure or decentralized as Ethereum's. As some of you will know, the Solana blockchain has a history of experiencing outages. For what it's worth, there have been no outages on Solana since February last year. On the decentralization front, meanwhile, Solana has just under 2,000 validators, according to the Solana Beach Explorer. The Explorer notes that the top 21 validators hold enough stake to theoretically cause issues on the blockchain if they collude. This is probably a consequence of the fact that delegation is possible. The silver lining is that there's no minimum stake required to become a Solana validator. Staking rewards for validators and delegators are roughly 7% per year with a 5-day lockup period. Misbehaving validators are slashed, but this slashing is done manually and is uncommon according to staking rewards. Unfortunately, Solana is even more centralized at the client and node level. Solana validators only currently use 2 clients, and all of Solana's transaction history is stored on Google Bigtable, a centralized server. Fortunately, though, Solana is working on 2 more clients, with one of them expected to launch soon. And you can learn more about that by watching our recent Solana review. The link is down in the description. So this ties into round 3, tokenomics and price. ETH is the native cryptocurrency coin of the Ethereum blockchain. It's used for staking and to pay for transaction fees. ETH had an initial supply of 72 million, which was distributed as follows: around 83% to ICO investors, around 8% to the Ethereum Foundation, around 4% to the developers who originally built Ethereum, and 4% to a program which allowed developers to purchase ETH at the ICO price of 31 cents. Now, ETH has no maximum supply, but its inflation rate is only around 0.5% per year, according to Ultrasound Money. As most of you will probably know, transaction fees are often very high, and a portion of them are burned. This means that ETH's supply can be deflationary as more ETH is being destroyed than is being created. Assuming the demand for ETH stays the same, this destruction of ETH supply means that its price goes up over time. And it's safe to say that ETH has had no problems with price over its history. ETH has risen by more than 7,000x from its ICO price. Note that the fee burn was implemented in August 2021. Of course, these gains are relative to ETH's current price. Now, it's impossible to predict how high ETH could go this cycle, but it's possible that it's following BTC but one cycle behind. If this is indeed the case, then ETH's market cap could reach over $1.2 trillion. And this would translate to an ETH price of well over $10,000, 5 to 7x. You can learn more about ETH's potential by watching our most recent Ethereum update. The link is likewise in the description. Now, Sol is the native cryptocurrency coin of the Solana blockchain. It's used for staking and to pay for transaction fees. Sol had an initial supply of 500 million, which was distributed as follows: around 60% to investors, around 20% to the team, and around 20% to the foundation. The average sale price was 20 cents per Sol, and I'll remind you that most of Sol's investors were VC firms, and two of the largest investors were FTX and Alameda Research. And you can learn more about FTX and Alameda's involvement in Solana's ecosystem using the link in the description. I digress. Anyways, Sol is infamous for having an extremely aggressive vesting schedule. As you can see here, almost all the Sol allocated to the parties I just mentioned was apparently unlocked in January 2021. What's strange is that this had no effect on Sol's price. And it seems a new vesting schedule was introduced later. In any case, Sol likewise has no maximum supply and currently has an inflation rate of around 6.5%. This inflation rate will fall over time until it hits around 2% sometime towards the end of the decade. 50% of transaction fees on Solana are burned, but because the fees are low, it's harder to offset the inflation. However, this hasn't stopped Sol from experiencing a 500x gain from its ICO price. More importantly, our calculations suggest that the sell pressure from the FTX and Alameda bankruptcy will have next to no impact on Sol's price. Note that we covered this in our recent Solana update that I mentioned earlier. Once again, it's impossible to predict how high Sol could go this cycle, but it is possible that it's following ETH, but one cycle behind. If this is indeed the case, then Sol's market cap could reach over $500 billion. This would translate to a Sol price of over $1,000, a 10x gain. And speaking of which, if you're planning on trading ETH or Sol, then you have to check out the Coin Bureau deals page. It's got trading fee discounts of up to 60% and sign-up bonuses of up to $40,000 on the best crypto exchanges around. And these deals are available for a limited time only, so get down to the description before the offers lapse. Now, this relates to round 4, and that's adoption. As a rule of thumb, you can measure a crypto project's adoption by looking at the downloads for its most popular browser extension wallets, the number of users its decentralized applications have, and the total value locked in its DeFi protocols. Seeing as we're making an important comparison, we'll throw in some developer stats as well. So, starting with Ethereum, the MetaMask wallet has over 15 million downloads. The caveat is that MetaMask is also used by other EVM-compatible blockchains and Ethereum's Layer 2s. Still, when you include all the other browser extension wallets for Ethereum, its total user count is likely around this 15 million figure. According to data from DappRadar, Ethereum currently has around 400,000 active users. This is consistent with the number of active wallets noted by the Etherscan blockchain explorer. If you include Ethereum's Layer 2s, this number is much higher. It's up for debate, though, whether they should be included. Similarly, the total value locked on Ethereum's DeFi protocols currently stands at around $30 billion, according to DeFi Llama, but around $20 billion of this value is coming from ETH being staked through Lido Finance. However, even if you disqualify this TVL, Ethereum is still the largest chain for DeFi by a wide margin. Now, for developer activity, we use data from Electric Capital's developer report dashboard. It notes that Ethereum has almost 6,000 developers, almost 2,000 of whom are working full-time. Again, this number is much higher if you include the devs working on Ethereum's Layer 2s. As for Solana, meanwhile, its Phantom wallet has over 2 million downloads. The caveat here is that Phantom has likewise gone multi-chain, but this was a fairly recent change. This means this download statistic does likely reflect Solana's total user count, particularly because the other Solana wallets aren't nearly as large. According to data from DappRadar, Solana currently has around 1 million monthly active users. This is slightly more than what's noted on the SolScan Explorer, which reveals that this figure is likely due to a huge surge in activity in December. Even so, The Explorer reveals an average active wallet count of 500,000. Conversely, the total value locked in Solana's DeFi protocols is not as impressive. It stands at just under $1.5 billion, with more than $1 billion coming from Marinade Finance, which likewise provides liquid staking. In this case, you could arguably include it in the TVL, as the staking barriers are lower for Sol. Put simply, this staked Sol is probably being actively used because it's easy to stake as a delegator. As for developer activity, Electric Capital's aforementioned dashboard notes that Solana has around 950 developers, 270 of whom are full-time. I'll note that the Solana Foundation recently reported that there are over 2,500 developers, but this report included the entire Solana ecosystem, not just Solana. And as a not-so-fun fact, building on Solana is apparently very difficult. Anatoly himself has said that building on Solana is analogous to, quote, chewing glass. And Solana even has a podcast with the same name. And this pertains to round 5, and that's challenges. We'll provide 3 for each. Ethereum's first challenge is fragmentation. In its current form, the Ethereum blockchain itself isn't suited for the average retail user. This is due primarily to its sky-high transaction fees. The result is that most of Ethereum's adoption and usage has migrated to its layer 2s, which are growing exponentially. As Coinbase noted in a research report from 2022, this could create a scenario wherein the Ethereum blockchain loses adoption and usage, decreasing the overall demand for ETH. After all, the average Layer 2 user only needs a few dollars of ETH. The average Layer 1 user needs to buy hundreds of dollars. Ethereum's second challenge is security. Despite being the most secure proof-of-stake blockchain, Ethereum has experienced its fair share of technical issues over the last year. The most severe of these were likely the transaction finality issues it experienced last summer. They weren't the only issues, though. Now, obviously, these issues are ultimately due to Ethereum's ongoing development as part of its ambitious roadmap. For context, Ethereum's development philosophy is often summarized as move fast and break things. This will likely need to change if Ethereum wants to see more institutional adoption. Ethereum's third challenge follows on from the first two, and that's competition. A prominent crypto podcast host, who shall remain nameless, recently asked a cutting question. Would anyone use Ethereum if it was released today, given that you can get a better experience at a cheaper cost on other chains? Well, naturally, the answer depends on whether you value security and decentralization over scalability. The harsh reality is that the average person doesn't care much about decentralization, much less the average financial institution. And some would go as far as arguing that most don't really care about security either. Look no further than the high cybersecurity risks at most companies for evidence of that. And don't even get me started about the poor security most of us employ in our daily lives: passwords, sharing data, etc. Now, when it comes to Solana, its first challenge is regulation. In case you missed the news, the SEC argued that Sol was a security in its lawsuits against Binance and Coinbase, and again in a more recent suit against Kraken. Sol has since been delisted from multiple, albeit small, crypto exchanges in the United States. Given the outsized impact entities like Solana Labs and the Solana Foundation seem to have on Solana's ecosystem, it's going to be hard to argue that Sol is not a security if the SEC ever decides to actually sue the project. To be clear, this hasn't happened yet, but it's a very big risk to be aware of. Solana's second challenge is also security. Despite having no outages since February last year, its history of going offline seems to have damaged the perceived reliability of the project. Like Ethereum, Solana has also embarked on an ambitious roadmap that's likely to result in more issues down the line. In contrast to Ethereum, Solana's ecosystem hasn't become systemically important to the crypto market. So, when you combine this with Solana's history of outages, the tolerance for these issues will likely be very low in the crypto community. If all goes according to plan, though, it should be smooth sailing from here. Solana's third challenge is also competition, specifically from so-called Solana killers like Aptos, Sui, and Sei. Anatoly himself has admitted in interviews that Aptos makes him nervous due to how easy it is to build on its blockchain. Meanwhile, Sei has seemingly surpassed Solana in terms of speed and finality. This is more significant than you think because Solana's biggest selling point so far has been that it's fast and cheap. On paper, Solana's technology means that its speed is only limited by hardware constraints. In practice, however, other crypto projects could outpace it, and that could undermine its USP. On that note, if you want to learn more about Sei and other promising crypto projects, consider joining the Coin Bureau Club. We recently reviewed Sei, and we review other promising small and mid-cap projects voted on by our members. Prices increase on the 15th of January, by the way, so join ASAP using the link in the description. All right, gloves down, let's take it from round one, the founders and funding. Ethereum arguably wins round one, especially when you account for the period within which these crypto projects were founded. Yes, Solana's funding is arguably more impressive, but it came after an era that was defined by Ethereum's founders and its history-altering ICO. It's apples to oranges. Seriously, imagine that crypto was this large, but there was still next to no innovation. How much money do you think a crypto project planning to introduce smart contracts would raise? It would probably raise a lot more than the project that's just trying to become a faster version of Bitcoin, that's for sure. Anyway, round two arguably goes to Ethereum as well. That's because the project has not only managed to remain secure and decentralized enough to sustain much of crypto's ecosystem, but it's managed to do so while transitioning from proof of work to proof of stake, plus making huge changes to tokenomics. Could Solana's focus on scalability over decentralization and security pay off in the end, though? Well, as we noted, it probably will because most people don't seem to care about these things. If that's true, it's going to be a race to the bottom, ending with all of crypto being run on a centralized server controlled by the Fed. Anyhow, round three arguably goes to Solana. Besides the fact that Sol has more potential for gains in percentage terms during this cycle, Solana itself also has much more room to grow as an ecosystem. Not only that, but this is an ecosystem that can live on its layer 1 thanks to its cutting-edge scalability. By contrast, Ethereum could in fact lose market share to its layer 2s, similarly to how it lost market share to other layer 1s during the last cycle. Make no mistake, the same thing, though, could happen this cycle with Solana and the Solana killers, but for now, Solana is far ahead of them on most metrics. And that's why round 4 arguably goes to Solana too. In case you haven't noticed, Solana appears to have the same number of monthly active users as Ethereum, despite being a fraction of its size by every measurement. This is impressive, and it foreshadows Solana becoming the most active blockchain of all. The caveat in this case is that Solana's adoption is coming mostly from the United States, where it, and the use cases it's focused on, like crypto payments, face big regulatory hurdles. With a few strokes of a pen, Solana's growth could come to a grinding halt, but for now, it does seem that the SEC has bigger fish to fry. So this leaves the final round, and we're tied 2 for 2. This is appropriate considering that the challenges each of these crypto projects face are what will make or break them in the end. Now, the winner here really depends on whether you value decentralization and security more than scalability. If you're a fan of our channel, you'll know that we care a lot about decentralization and security. That's because they're what make crypto, well, crypto. Without decentralization and security, you literally have just another version of the existing financial system that's even worse than the one we have now. That is a long-winded way of saying that we believe Ethereum wins the final round, but I'll also note that there's a saying which asks, do you want to be right or do you want to make money? There's no denying that Solana has more potential to grow than Ethereum at this point in time, and that is why we are betting on both. Not financial advice, of course. Okay, so that's all for today's video, folks. If you learned something new, let us know by smashing that like button. If you want to keep learning, subscribe to the channel and ping that notification bell. If you want to help others learn, take a second to share this video with them, assuming they'll watch it, of course. Remember that the Coin Bureau Deals page has trading fee discounts of up to 60% and sign-up bonuses of up to $40,000 on the best crypto exchanges, and that the Coin Bureau Club membership price increases on the 15th of January. I hope you remembered where all of the links are, but if you didn't, well, they're in the description. Thank you all so much for watching, and I'll see you in the next one. This is Guy, signing off.